Hello and welcome to Money Matters. I am Folashade Ogrinde. Nigeria might not let up its quest for borrowing anytime soon as the Minister of Finance, Budget and National Planning, Zainab Ahmed, disclosed that Nigeria plans to borrow more money to fund its infrastructure capacity. This comes amid growing concerns and calls to government to stop its plans to borrow and concentrate on exploring other means of raising funds. Now, recently, the Debt Management Office reported that the Nigerian government spent a sum of 1.02 trillion naira in servicing domestic and foreign debts in the first quarter of 2021. And this represents a 35.7% year-on-year increase compared to 753.7 billion naira spent in the corresponding period of 2020. I'm joined now by Wilson Erumebo, the senior economist at the Nigerian Economic Summit Group, and Johnson Chukwu, CEO of Kauri Assets Management Limited. Thank you very much, gentlemen, for joining us on the program. I'll begin with Mr. Chukwu. Over and over again, when questioned about Nigeria's increasing debt profile, the federal government says the borrowings are justified. Now, what do you make of this?
Well, thank you once again for having us. I will start by saying when the federal government says the borrowing is justified, we have to put it in context. Probably if you are referring to 2020, when the government had to borrow massively as a result of COVID-19, we could say it's relatively justified because most countries went into expansionary fiscal policy arrangements to cushion the impact of COVID-19 on their economy. But previously, prior to 2020, we've always had severe budget deficit to the extent that the figures being bandied around is about 10 trillion of ways and means funding of the federal government in the past 6 years. So that means the government has been borrowing not just from the debt market, but also from the central bank. That volume of borrowing cannot effectively be justified by the fiscal asset that had been built over that period of time. A lot of borrowing is going into servicing government recurrent expenditure. If you take, for instance, last year, where total government revenue was just about 3.9 trillion naira, and total government debt service was about 3.26 trillion naira, which meant that the government spent about 83% of total revenue on debt service. That same year, the government spent more than 4 trillion naira on recurrent expenditure. Where did that come from? It came from borrowing. The about 1.6 trillion that was spent on capital expenditure was also from borrowing. So government ended up borrowing about more than 5 trillion last year. So that will show clearly that the government borrowing is not effectively going into infrastructure development. Rather, a lot of it is going to recurrent expenditure. So if government calls out borrowing, government will be compelled to reduce its recurrent expenditure. That's why I would say that to say it is justified, we have to put in context. In a year like 2020, when the pandemic hit a home run, it was justified. Previous years, I doubt if it could be justified by infrastructure development.
Now, beyond the justification for this borrowing, Mr. Erumebo, recently the Debt Management Office reported that Nigeria's total public debt portfolio rose from 12.12 trillion naira in June 2015 to 33.11 trillion naira as of March 31st. Now, to what degree do you think this will affect Nigeria's goal of economic recovery in the long run?
Well, ideally, so every country borrows, no doubt, just like Mr. Chukwu said, COVID-19, just caused a lot of disruption. I mean, we saw widening fiscal deficit across several countries, African countries, countries outside the continent and all. And of course, many countries resorted to borrowing to close this gap. And I think one thing also to note is that when you borrow to fund productive activities, we are talking about maybe provision of infrastructure, provision of, support for specific industries where, if you support them, they'll be able to, earn revenue and then pay taxes. And of course, you can get the returns back. And I think that's when we can argue and say that borrowing is good. But borrowing to fund, certain services, particularly when we talk about foreign services, what I think that's what the problem is. Yes, so definitely we need to borrow, but I think we need to do a lot more to support and earn even more revenue to be able to cover and service them. We see government, even economists are sometimes often referred to debt to GDP ratio as one of the indicators that shows there's more room to borrow. But you don't service debt with GDP. You service your debt with the amount you earn from revenue, as it were. So if you are not doing well in terms of revenue, then it becomes a challenge. And I think that's the problem we've always been having in Nigeria. We cannot continue to keep borrowing to finance activities that are so-called recurrent in nature. We need to be able to move beyond that, because if we don't, I mean, we'll keep falling into this cycle of borrowing and borrowing to even service existing debt. We are already there now, and it's of course a problem.
Now, in what ways do you think the government can curb its increasing need to borrow?
It is a duty of the government to drive economic growth and economic diversification. It is the government's duty to come up with policies that, one, will stimulate private sector investment and therefore grow government revenue in form of taxes. And my approach to it is that let's start from the issue of borrowing to fund infrastructure, which is further exhibiting the debt burden the country has. Because the government is not known to have the best value for money in terms of capital expenditure implementation. It might be better that those projects or those capital assets that are economically viable should be handed over to the private sector to fund, to build. And that will reduce the compelling need for the government to borrow. That will also quickly lead to the build-up of supporting infrastructure for economic development, economic investments. So if we do that, we are likely going to bridge the funding gap to the extent that the government does not need to borrow so much for capital expenditure. The next thing is that for government to go back to the fiscal guidelines that govern implementation of the budget, particularly the Fiscal Responsibility Act, and they ensure that the government recorded expenditure is limited to its revenue. If we can match the recorded expenditure to the revenue, then we would have solved part of the problem. So the borrowing that is currently going on to fund recurrent expenditure will be eliminated. That way, the government burden will come down, and then debt service over time will reduce, because it can only reduce when government grows its revenue, so that the proportion of revenue that is going into debt service will be inconsequential, or the burden will be less. But if we continue with the current arrangement where government is trying to build almost all capital infrastructure from budgetary allocation, we will remain in the same state, and it's going to worsen, because if you're talking about 83% debt service to revenue, and you have about 10 trillion naira you want to collateralize or securitize, that is by ways and means, that means you're going to issue federal government bonds of 10 trillion naira, then the debt to revenue ratio is going to be more than 100%, which means the government will not be borrowing to pay debt or to service debt, not even to pay back loans. So you can imagine the situation the country will be in when we start borrowing to service debt. And we are close to that. If you're talking about 80%, then you are close to 90% and probably 100%. And we are still building up debt this year.
Can I ask?
In 2021, the government budget deficit is about 5.6 trillion naira. That's assuming that government can raise the revenue of 7.9 trillion, which to me looks too optimistic. If we borrow another 5.6 trillion naira to the 33 trillion naira we have, then your debt service will be certainly above 100%. And that's when we actually go into a debt trap. So we are close to a debt trap. To avoid it, the country must change from the approach of funding infrastructure from budget allocation to funding infrastructure through private sector investment.
Now, thank you very much, Mr. Chukwu. Now, Mr. Erumebo, let's talk about revenue generation, which is, of course, one of the problems or issues the federal government seems to be having at this point in time. It's clear that the federal government has introduced several policies, to ensure that, they breach this gap in revenue generation. But obviously, these policies, so to speak, might not be generating the results that Nigerians are expecting. Do you think the government is doing enough? And if not, what else do you think can be done to breach this gap of revenue generation?
Well, so if you look at the data, I mean, you would realize that from the revenue side, I mean, and even when you look at experience from other countries, it's quite difficult for many countries, especially given where we're coming from. COVID pandemic, its impact on citizens, households, revenue, as it were. So what that means is you can't really do much in terms of taxes on businesses. And even as of last year, we had a case where we increased VAT, and to be able to get some revenue, from goods that are sold in the market. So, but again, I think one area that we need to pay more attention to is particularly in the roles of the state, trying to give a lot of, would I say, economic power to some of these states to be able to explore some of these resources. Like we all know, I mean, Nigeria is, significantly endowed across many, across all the states. I mean, whether you are talking about human capital, mineral resources, and all that. And I think there's a lot of burden and load on the federal government to be able to harness some of these resources and potential. And I think if you devolve and give more powers to states to be able to explore some of these resources, I think that's one way we can easily, generate additional revenue. The other part is on the business environment. We cannot stress, how important it is, particularly when we're looking at, revenue generation. We're so quick to point to statistics that says, oh, Nigeria's revenue to GDP is one of the lowest in the world, especially when we want to increase taxes. So we can easily say, oh, it's 6%, is one of the lowest in the world, is compared to Pakistan, Afghanistan, and the likes. But how about when we talk about improving efficiency of government, improving regulatory environment? So it's not just enough to want to raise taxes all the time. I mean, we should also be able to compare ourselves to Sweden, some of the most advanced European countries that are also doing well in terms of efficiency of the use of taxes and other revenues. I mean, to be able to generate more and earn citizens' trust. So I think that's one area that we haven't really done well. Make the business environment conducive. We're talking about regulations. We're talking about policies. We've seen several cases of reversals, whether it's border closure and then it's suddenly reversed, whether it's ban and all that. Those things deter investors and investment into the country. And if you don't have that, how do you then generate as much taxes as you need from businesses? So I think this is very important. And lastly, on transparency and accountability, particularly in the use of government funds, I think this is also one key thing to implement.
Well, certainly. Gentlemen, we'll take a breather here, but Money Matters returns after this break.
Corruption not in my country.
Hello? Yeah, I found your wallet in front of a supermarket. Meet me at Apple Junction. Yes, I'll be waiting for you.
Now we find out. Two of us.
Thank you very much, officer. It's surprising that men like you still exist in the police force.
Yes, so...
Oh, yes.
This is just a token of my appreciation.
Oh, no, you don't need to do this. We're only doing our job.
Thank you very much. God bless you.
You're welcome.
Now I know police is really my friend.
Yes.
Friend. Hey. Which came out with this one? I don't understand.
You know your problem. You are greedy. I'm a policeman who is doing his job. All forms of corruption in the force. Not in my country.
Corruption not in my country.
Welcome back to the program. Well, if you're just joining us, we've been talking about Nigeria's rising debt profile with Mr. Wilson Eremebo and Mr. Chukwu Johnson. Well, this conversation would not be complete if we don't talk about loans obtained from China, which amount to 17 in number. Now, the curious part of that is that Nigeria will still be servicing these Chinese loans till around 2038, which is the maturity date for the last loans obtained in 2018. Now, what do you make of this, Mr. Eremebo?
Well, about 10% of Nigeria's external debt is owed to China. To me, I think when you look at the other countries, whether it's the European countries, the US and co, they are far behind, on in terms of the amount Nigeria owes to these countries compared to China. For me, I think 10% is a huge exposure to just one country. And when I think that's something that perhaps needs a strategy going forward as to, especially in relation to accumulating some of these external debts, we must try as much as possible to ensure issues of balancing, and we're able to control some of the risks that come with owing so much to just one country. The other thing I think is also important is on transparency. I mean, what are these debts used for? What is the value for money? How often do we even publish details about some of these transactions that we go on? What we mostly see are just headlines and, oh, Nigeria borrows XYZ to be used for this project. But we need a lot more details. Can we get that money elsewhere at a cheaper rate? Can we ensure that the money is actually used, in terms of tracking some of the usage of these funds? I think that's one key area that we need to do a lot more, particularly in terms of external debt.
Considering the World Bank report that 40% of Nigerians, that is 83 million people, are living below poverty line, do you see an economic recovery happening anytime soon?
Let me start by saying that the issues about the China debt, it's a complex issue. And what do I say is a complex issue? One is China seems to be one of the, I'll say it's a complex issue. One is China seems to be one of the our bilateral trading partners that's willing to provide funding to us at some concessionary rates. And the preconditions or the conditions present to draw down these loans are not stringent, unlike what you have in Western countries. But on the converse, China is also using its labor and supplying most of the material used for these projects that are funding. So you are not sure that we're getting full value for money, just like Wilson said, in terms of those debts. So in effect, and eventually the capital flows back to China, but the burden still remains with us, although some of the infrastructure is also with us. But back to the issues you just raised. How do we avoid this situation where we continue to borrow and we are not, how do we win ourselves of this borrowing culture that we have built over time? I did mention the issue. We have to get to the point of legislation where it becomes a stringent legislation for you to borrow for recurrent expenditure. When you do that, the government will be compelled to cut down on its over-bloated bureaucracy. The government has toyed with the idea of rationalizing the ministries, agencies, and departments, MDAs, for the past 10 years or thereabout. If you remember, there was a Steve Olasaya report that came out with a proposal to rationalize some of the agencies. If you look at it, about 4 trillion naira was spent last year on recorded expenditure. The greater part of that was on salaries and wages of federal government employees. So if you do not rationalize, then you are going to be continuing to live with a bloated bureaucracy that you just have to carry. So there's no way you can cut down the current expenditure without rationalizing administrations and departments. Which government is ready to take that decision? It's a decision we have to take one day. And then if you do that, create opportunities, create an enabling environment for the private sector to absorb those who may lose their jobs. So that's the first thing to do.
I'm wrapping up.
Without that, continue to deal with high cost of running government. The other aspect I mentioned earlier is that we now need to identify those physical assets or infrastructure that are commercially viable and concession in the private sector to build or underbuild, operate, and transfer. We will still enjoy those infrastructure, but the burden of debt service and debt borrowing will not be on the federal government. The private sector is in better position to extract value for money and to be more efficient in managing some of these assets. If we do that, rationalize the public sector, and then hands off from commercially viable infrastructure to the private sector, we're going to cut down government borrowing, and we're going to create enough room for government to invest in critical sectors of the economy, health, education, that will lead to economic development.
We've certainly had a very robust conversation, gentlemen. Thank you very much, Wilson Erumebo, Senior Economist at the Nigerian Economic Summit Group, and Johnson Chukwu, CEO of Kari Assets Management Limited. Thank you very much for your contributions. And it's a wrap on the program. Thank you for watching. Bye for now.